Everyone's going nuts for property in Melbourne. I got no idea why. So I decided to look into the data, and here's what I found. My name is Jalen Musumeci. I'm a qualified property investment advisor with Leverage Property Advisors, and I'm going to be going through the Greater Melbourne leading indicators just to see what's going on and why everybody's looking at property in Melbourne to get a decent understanding of what's happening there. Before we kick on, just the usual advice disclaimer. This information is for general information purposes only. It does not constitute financial advice. If you are keen on receiving financial advice that is specific to your personal situation, I strongly recommend you speak to a financial advisor, mortgage broker, legal professional, registered tax agent, or otherwise before making any financial decisions. This is purely investment property factual information that we'll be discussing moving forward. So in terms of how Melbourne has been performing, you can see that there's a number of areas that have been in decline, sub 0%, obviously, but between 0 and -5%, particularly in the west and north of Melbourne CBD there. Some towards the east as we start heading toward Frankston and the Melbourne Peninsula. You can see around the Pakenham area. Property prices have been declining, some areas more than others. There's a couple of suburbs that have been between 5 and 20%, which is historically, that's not the greatest to see, but a lot of people I think are buying the dip in that sort of mentality. And I don't know if that's correct. When we look at the home value index over the 3-month period, it shows that central Melbourne and the inner city suburbs have been declining. Again, up to -3% there. You can see that there's a fair amount of suburbs in inner Melbourne that have been in decline over the last 3 months. So is that a sign of a buy the dip mentality as well, or that negative capital growth is actually accelerating because we're looking over a shorter term period here? So the home value index is a little bit lumpy in that regard. Asking property prices have been increasing over the long-term period. When we're looking at, again, Greater Melbourne, you can see over the last 12 months that we've gone from a median capital value of about 1.25. We're sitting at about 1.35, 1.4 at the moment, which isn't a great deal there. In terms of rental yield has been relatively stable. We're looking at around about just over 3.5% there, which isn't much. It's not poor, but I'm buying in a lot of areas where we're getting 4.5 plus rental yield at the moment. So comparatively, it's not too great. Property listings seem to have increased over the last year or so. You can see that we're averaging anywhere between sort of 35 to 37,000 over the last couple of years. Whereas previously that would have looked more like 35,000. So in terms of increase, we're seeing a lot more stock on the market. It doesn't look like that stock is taking as long to sell. There's more in that under 30-day mark. It's a little bit lumpy here in the over 180-day mark, but comparatively, it still seems like there's a fair amount of property on the market. In terms of vacancy rate, vacancies have actually climbed to 2%. So you can see since it last dipped at the beginning of 2024, the vacancy rate has climbed to 2%. And then there's this 4%, 5% mark here that the vacancy rate hits over COVID and notorious COVID lockdowns that Melbourne had there. But over the long-term average, we normally sit at around about 1.5% for Greater Melbourne. So by that respect, we're actually seeing that we have a high vacancy rate at the moment. Similar story for the rental listings. Rental listings hit 30 to 33,000 there over the COVID period. Over the long term, between 2011 and 2018, we had a declining rental listing number there. It's dropped to around about just over 10,000. I want to say 10 to 12,000 there. And then we had a post-COVID trough that fell below the 10,000 mark there. However, since the beginning of 2024, rental listings have been increasing. So we're seeing listings hit the 15,000 mark there, which it hasn't been that high since mid-2022. Weekly rents have climbed since 2022. You can see the beginning of 2022, we saw it around about the $550 mark. Now we're sitting at, it's just hit $800. So even though rental yields are staying relatively the same, rents themselves have been rising at a similar rate to property prices, which means that we've hit the sort of sub 800 mark there, or just touching on 800 as of January 2026. So thank you everybody for watching. I hope you've taken something away from this video. I really just want to dispel any myths associated with Melbourne's property market and present the factual leading data that attributes to capital growth there. If you do have any questions, please don't hesitate to reach out. I'm more than happy to answer them. Otherwise, thank you and have a great day.